Hi guys, John here, forexfire. Coming in nicely if I may say so. Right, so we're going to be going on, we're going to do a little bit of something that I look at when I sort of do my supply and demand. If you want to see more on those videos, head over to YouTube, look for forexfire, or see if I've got this mic around the right way, right? Or you can simply scroll a little bit further down on my wall. You'll see a fantastic video that I done the other day. Now, I'm going to go a little bit more in depth on how I sort of build a chart up. And we're going to be looking at the monthly, the daily, and then I do believe the hourly. So we're going to be creating structure, and we're going to be creating a high point and a low point. We're going to be working within those structures, because if we break out of the lower time frame, because obviously the movement is fractal, if we break out of those supply or demand areas, then we are looking for entries into a more refined area from the bigger picture, which may be the monthly, the daily, or the 1 hourly. We then be looking to refine the entries once we head towards those zones. Okay, so again, supply and demand is basically support and resistance areas in a sense. However, you can factor these in with regards to sort of smart money concepts. And from there, you can factor your Fibonacci levels in as well. But we're going to head to the chart and I'm going to explain a little bit more. And hopefully what I'm going to show you will sort of give you a couple of light bulb moments, give you an understanding, and hopefully we can find some sort of entry as well. Now, ignore the mess that's in the middle of here at the minute as we delve deeper into the actual chart and get into the nuts and bolts and the mechanics. We're going to see what's inside of them fractal movements, and then create other points of interest. And from them points of interest, we are basically making a big range into a smaller range into a smaller one. Okay, if that makes sense. So as you can see on here, we'll start with the bigger picture. We'll scroll down. We've got on the monthly, we've got some structured points here. Let's just get the brush. You've got highs, lower high, lower high, lower high, and then you've got a lower low, lower low, lower low. We've then come to sort of an accumulation zone. Okay, as we've come to accumulation zone, it's just liquidity. Okay, and liquidity is just where you've got a lot of retail traders and the banks are just letting the pool of money build up onto this. Okay, now we'll get the magic wand out. Now you'll find price spiked up. Okay, and then we came down. Now this is on a monthly chart. Okay, so if we were to use the signature pattern smart money, okay, you can see we've taken out liquidity on the high side here. We've taken out liquidity on the low side here. So technically, if you forget about all this mess, okay, if you forget about all of that mess there, we broke structure here and break structure too. Technically, we could end up with a push up towards here with an entry on a smart money, and then coming down to lower points of areas which are other demand areas. Okay, but that's just a little insight on the monthly side of things at the moment, and a little bit more in depth sort of thing. So if we blow the chart up a bit, so again, supply and demand, bit like resistance in a way, or support. Supply will always be on your ceiling, demand will be on the bottom. And just bear in mind, obviously, we've got the liquidity areas here, both high and low. We've had the signature pattern, as we call it, break structure 1, break structure 2. In the long term, in the long run, we'd be looking for price to come back up to this area to sort of mitigate off here and then give us the push down. Okay, so that's not what I'm looking at the moment. So we're going to then go down to the daily. Okay, so if we just open up the chart a bit more, And you can see as well, we've got the high to a low. So we've got one leg here movement. So we've got a high point to a low point. And it's basically the supply zone or the order block of wick to wick of the last buy before the sell on the supply area. And then we've got the demand area, which is the last down, which is the last sell before the buy on the demand zone. Okay, so hopefully that bit has made sense. Now if we go down from the monthly to the daily, see where we are daily. Now you'll see we've got supply daily and we've got demand. We've got a couple of demand dailies here. Okay, 2 demand dailies and 2 supply dailies. Now again, we've got a structured area times fractal. So we could be looking at sort of a push up to the upside to mitigate from here to come down to one of these demand areas. Okay, any one of these demand areas is a legitimate area of point of interest for the price to go to. Which way it's going to go to, we need to determine when the market's open and when price settles, which direction it's going towards. However, what we've got is a movement at the minute where price has been bearish all the time. Okay, prices came down, and as price has been bearish, we've still created on the daily structural points where we've got highs, lower highs, lower highs, we've got lower lows. Again, a little bit of liquidity has formed here. Let's just get this in. Just you can see that we've got a treble bottom there. Okay, a little bit of liquidity has formed there. We've had the push out. Okay, as we've had the push out and we've grabbed this area here. Okay, we've grabbed all of the banks have grabbed all that area, which would then invalidate, or as we call it, grab those liquidity areas. Okay, it'll grab all of that there with this push out. We've then come back in to test a swing area. Okay, so if we just do this to this, there's your money zone. If you want to know what the money zone is all about, again, this area here, 71 to 786, touched it to perfection. Again, this is all recorded, but it is done raw, to be fair. We'll just get rid of that. If you want to see what mitigation is, I do a video on my YouTube channel. Head over to that. We'll get rid of this down. We know it's in a bearish maneuver, but the point that I'm interested in, we've gone right down to the 1 hourly. Okay, guys, so we just go down the 1 hourly, and within the monthly and the monthly on the downside, we've got the supply area and demand area on the high side and the lower side on the daily. Now, this is where I'm interested in price as it is at the moment. Okay, just because price had a sudden surge up here, okay, we are still bearish on the move overall, simply because this was the last high point. Okay, and this here, yes, it's retraced, but it's never broken structure of that area there. If it did, it would be heading back into mitigate contracts on the demand zone further up, which was the daily, the supply daily, that would have started mitigating the contracts within here, but it has not surpassed that. So overall, we are still within a bearish move. Okay, so that takes us into, let's get rid of this, get rid of this. So that takes us into the area down here. Okay, take your attention to this part of the chart at the moment. We've got 2 supply areas on the 1 hour, and again, if we just highlight this out a bit more, and we've got a demand zone on the bottom. So now we're getting into the nuts and bolts of where we are. We've determined we are officially in that bearish move. Okay, so as we're coming down, we're bouncing off this trend here. You only need a couple of touches for a trend. Again, retail traders, liquidity's forming within these areas. Okay, so as you're bouncing down here, again, you've got liquidity around about there. So it has taken out the liquidity on the bottom on the downside. We may get the push back up into the supply area. Okay, now if we get that supply area mitigated and touched, I would then be looking for a further move, because we are bearish. I'll be looking for that further move down to the bottom end of the next point of interest, which is the last sell before the buy candle, which will form the floor of our demand. Okay, so that's what I'm looking at on this particular pair at the moment. Let's take a look. We'll get rid of this. And it can work both ways, to be fair. Technically, it might not push up to here. However, the trend line would suggest it may come back up to retest the trend line area for then to push down. It may simply just continue down, hit the demand area, okay, and push up back to the supply. It can still do either or. It would simply mean the move is still in a bearish continuation move on the downside, because overall on your daily and the monthly, that's what we're in. We're in a downtrend. Okay, so we'll just go back to the hour, and then we'll mark up something on the chart within the parameters or within the range of that. So I'm hoping you're following along at the minute. Okay, I hope that's, I'm sort of giving you a little bit of a light bulb moment on what these order blocks can contain, what they're about, and how easy it can be to mark these up. Okay, so we went from the monthly to the daily to the 1 hour. Now, when it comes to marking these things up, okay, I normally get my fibs and I'll go within the zone, and all I'll do is I'll get 50% of the area, okay? Because it doesn't matter what kind of candle it is, and I'll show you this in a minute. The candle from wick to wick is just full of contracts, okay? Now, the halfway point is generally the area price will come back into to mitigate to. You can go into quarters, okay? It's a whole new sort of level of thing. It might only come into the 0.25, the 0.50, the 0.75, or the top end of the candle, or the bottom end, depending which way you're looking at it. So if we get a short position, I place it there, okay? Now just place this above. Okay, place this just above the area of the last lower high, because as you can see, as this downtrend has came down here, okay, you've got structural points. You got one there, and you get the drift. When we've had the retracement and the pullback from each individual step back down the mountain, we've retraced back and we've never came back up to push above the area. The minute we do, it's a break of structure and possibly the sign of a reversal, but we've never gotten that. So another strong indication we are very much in a bearish move. Okay, so get those bits out. Now what we've got, let's get into the nuts and bolts, get rid of that there. We've got a stop loss of nearly 18 pips. Again, it's just pushing just above. We'll factor in the spread for our broker. Okay, now what we're doing is we could say, right, so on the hourly, we've had a bit of a push on this area here. Okay, a bit of a push on this area here. And this here is a demand zone for the 1 hour. Okay, so you could technically there, halfway point there, that's a 1 to 3.57. So, and there's method in the madness with this bit. If we do this bit here as an area, put in an area, and we'll have take partial, okay, maybe 50% of your trade. Okay, take partial 50% of your trade. Then what you could do technically, once you've come down, if this comes up and mitigates here, it comes down to here, and it's giving you that 1 to 3.57. You could take half your partial, half your trade, okay, from this area here, and move it to break even. Okay, then the overall move, I'd be looking at something along the lines of this, okay, on this bottom demand zone. That there's an overall move of 128.23. So looking at the move on this, again, let's take a look. So we're going from the previous high down to that there. Okay, I'm going to show you something else with regards to something I call a fire block. So just go into the cog, fire block. Now, generally, I mentioned 50%, okay? Just for confluence. Let's just see where we are. Right, so 50%, as you can see, if we get the retracement up, okay, take no notice of this stuff here. 50% if we get the retracement up. In fact, no, let's do this bit again. Do apologize. Delete that. First of all, let's take a look. Yeah, it's not going on to the money zone. So we'll forget about that bit. We're just going to go on to the 50% of that fire block. Okay. We'll be waiting for the retracement to come up. The 50% is more or less mitigating into the 25% area. Okay, you see this line here? We'll mark this out. And again, guys, I don't make this stuff up. I'm just going to see where we are. So we go in there, delete that. Yeah, because I'm going off on a tangent here, but I'm just going to show you something. If I just do this, 25 to life. Let's just see where this quarter bit goes to, okay? So that's to the top of the supply 1 hour. Look at that, guys. Look at that. So it was within that area, okay? Again, let's mark this out. Let's just go back on to the 0 point. Is there not? We'll mark this up 0.5. 0.5. Let's make that green. The 0.5, see this 0.5 is exactly mitigating into the quarter. So again, this is a block in itself, okay? We're waiting for the mitigation. The mitigations can generally give you halfway points. So the halfway point of the bigger fire block, as it comes down, what we are looking for, and what the reason I call this a fire block is, we are waiting for the push out of the bottom area, okay? So the flag will come back in, and it's going to test the halfway point of the previous fire block. But what makes this even more interesting is we've got a supply zone, okay, from the order block on the last buy before the sell. I hope you're following along. Within that, the open ended of the candle is at the quarter point of that zonal area. In conjunction to the bigger picture to the left, we've got the fire block, which is exactly halfway. So this is just stacking. It's stacking confluence on top of confluence, okay? So again, if we just get rid of some of this noise, and I'm happy to go with this trade, to be fair. I'm just going to get rid of some of this. And I'm going to put this up on my wall to see how it plays out on the forexfire trading view. So again, we've got overall picture, the 1 hour supply, the monthly supply and demand. The overall picture on the monthly is a bearish move. We've gone down to the daily. The daily is still in a bearish move. Then we've gone down to the 1 hour, and we've condensed that maneuver of the bearish move and the down continuation downtrend into this concise sort of nuts and bolts of the mechanics of that move into an area where we've got maybe a push coming back to an entry, which is to the previous fire block 50% of, but also on the on the active bankers candle area, it's going to be a 1/4 point for an entry. So it's fantastic. It's very artistic in its own right. From there, again, the only way this will be upsetting the cart is if we get the continuation of a push down, okay, and we hit this, then to come up to mitigate off this area. I would rather see this come up and mitigate off the higher side first, because it's going to give us a better risk to reward of 1 to 8. Again, once we hit that, we come down and mitigate off this first structural point of this lower low. We take 50% of the trade and then move it to break even. So again, just leave it at break even. If it was to come back up and hit the break even, you've still taken half of your profits, okay? If it continued down, happy days, you've just hit that next structural point and you've bagged that 1 to 8, okay, guys? So I'm hoping that's made a little bit of sense. I'm hoping that again, watch back and take notes. I'm just going to stop the share. If you are sort of new to all this, just follow me, click on my Facebook page. The link will be in the YouTube video, because I'm going to put this up onto YouTube. I'm going to put it into my Discord channel. That's another thing as well. So if you're watching this and you don't have access to my Discord, comment Discord, please. I will give you the link to get inside of the Discord, where I'm doing this on a day-to-day basis. Watch the video that I done earlier on the day before I headed to work. What you'll see with that was based on last week and sort of entries, exits, and stop losses. There could have been a chance, depending on where you got in and got out, an account growth of nearly 18% over 3 days of trading. It's all it takes. You only need to take 1 or 2 trades a day with this sort of technique, this strategy, and it's phenomenal. Okay, come and use us as a stepping stone. Itchy nose. Come and use us as a stepping stone. Let me help you build the 3 steps. The 3 steps. I'm going to give you 3 steps to success on your trading. First step is you obviously come inside of the Discord that we have. Let me set you homework weekly. I do that each week for the sparks in the group. I call them my sparks, obviously, because Forex Fire will build you your confidence in your trading and inside your own ability as well. Okay. What we do from there, we then start getting you consistent on the charts. So as you're building your confidence and submit your charts to the group, and you know this works and you see it in front of your very own eyes, you're building your confidence. Then you're building your consistency. We're learning your risk to reward, okay, capital management, risk management, and we show you how to correctly get in on trades, how to correctly work out your risk percentage on the trades, okay. And then thirdly, what we have there is you've got your confidence, you've got your consistency, and then lastly comes the profits, okay. Once you start stacking these things on each other, you then become profitable. What I like to do from there is then take you to one side. I'll get on a personal chat with you, a personal call. Doesn't matter whether it's an email, a messenger, a phone call, a Zoom call. I'll have a personal chat with you to give you the right steps to the next step, which is, again, coming from a stepping stone. You can see what we do as a bigger picture, and we'll get you the advice and the guidance to get you to the fully funded trader account status. Okay, so if that sounds like something you want to do and you've enjoyed the video, you like the content I do, please comment, please like, please share. If any of the guys that are in the setup that we have on the Discord community that is sharing this video, get back to the person that has shared this video as well, and then you could be the next success story in our community. On the bigger picture, just got to say this before we go, the bigger picture, in the last 30 days alone, the group, or the bigger picture from the stepping stone that we place you through, they've created over, I think it's 22 fully funded traders, and that is ranging from 100k accounts to 300k accounts. We are that stepping stone. Come in to that close community, let us build your confidence, your consistency, and your profits, and then we put you in the bigger pool where you will be swimming with everybody else and getting yourself towards that funded account. Okay, guys. So please comment, like, and share, and I'll see you on the inside.